Good day, friends, and welcome back to our channel. Today, in our Accounting Tales section, we're diving into the trial balance and how merchants caught errors before they ever happened. I'm genuinely excited to take you back in time and show you how merchants centuries ago kept their accounts honest, even without computers, calculators, or any modern tools. We'll explore how the somma dei dare e degli avere, the original Italian precursor to today's trial balance, became a clever and powerful method for checking accuracy in bookkeeping. Even with double-entry bookkeeping, mistakes could slip in. Imagine a merchant recording a shipment of 10 barrels of wine to Florence. He notes the sale in his ledger, marks the payment expected next month, and tallies his cash. But what if he miswrites a number, forgets a transaction, or accidentally adds a payment twice? Errors weren't rare. They could cost fortunes. Merchants needed a way to verify that their ledgers were accurate before totals were used to calculate profits, pay debts, or distribute earnings. To solve this, Italian merchants developed the somma dei dare e degli avere, literally the sum of debits and credits. This simple yet revolutionary idea was the precursor to the modern trial balance. By listing all ledger accounts with their debit and credit totals side by side, accountants could see instantly if something was wrong. If the totals matched, the books were likely accurate. If not, something needed investigation. Let's look at a practical example. The merchant receives 10 ducats in cash for a sale of cloth. Cash account, debit 10 ducats. Sales account, credit 10 ducats. He sells spices for 5 ducats on credit. Accounts receivable, debit 5 ducats. Sales account, credit 5 ducats. By summing all debit and credit accounts at the end of the day or week, the trial balance shows whether the ledger balances. It's like a checkpoint, an early warning system for errors. In the 1500s, merchants didn't have calculators. They relied on careful addition, mental arithmetic, and the physical structure of the ledger. Columns were folded, totals double-checked, and the trial balance became a ritual of verification. The principle was simple. Debits must equal credits. It worked across cities, currencies, and even complex trading networks. But the trial balance wasn't just about sums. It built trust. Investors, partners, and banks could see the books were accurate. A correct trial balance was a signal of reliability, even in handwritten ledgers. The concept endured for centuries. In the 1800s, British and European merchants used trial balances for growing companies and banks. Factories, railways, and corporations depended on them to catch mistakes early. Today, accountants still use trial balances, whether in Excel, cloud software, or ERP systems. The principle remains unchanged. And so, from the somma dei dare e degli avere to modern trial balances, this simple tool became a cornerstone of reliable accounting. By catching errors early, merchants ensured their balance sheets were accurate, investors stayed confident, and commerce could flourish. Thank you very much for watching. If you enjoyed this journey through accounting history, don't forget to like, share, and subscribe. Until next time, friends, keep your debits in check, your credits balanced, and your curiosity alive.